Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Kian Sarreshteh, the founder and CEO of InvestiFi, about how they are helping credit unions attract new members with investment services in crypto and in securities. So if you're ready, let's suit up and get out on the field. Kian, welcome to the show. Thank you very much for joining us today.
Thanks for having me. I'm excited to be here.
Anytime. Why don't we start by telling us a little bit about yourself and your company, InvestiFi?
Sure. My name is Kian Sarreshteh. I'm co-founder, CEO of InvestiFi. Been a bit of a serial entrepreneur over the last 10 years. Grew up building and selling technology products, which is really where I found my passion for technology and starting organizations that could make an impact, which is really what I think we're doing here at InvestiFi. So by way of background, some folks listening may have heard of our previous company name before we rebranded. We used to be called CryptiFi, actually, and we can get into that later on. But we actually rebranded to InvestiFi in 2024 when we decided to offer more than just crypto, right?
So tell us a little bit about what your firm does and how you work with institutions and/or users of the platform.
Yeah, so we are a QSO. I want to call that out first and foremost. And so the market that we primarily serve are credit unions. And we really approached digital investing, which is what we do at InvestiFi, through the lens of credit unions. And Kris, I saw on a previous, I don't know if it was a speech you were giving, but you mentioned first principles. And I think I saw a slide you presented about it. And I'm very passionate personally about first principles. I think when you're approaching a new startup or a new business or just trying to add value, the best way to do it is try and just from the ground up think through all the key considerations for what's going to be most important for the specific market that we're going to be serving. For us, that's credit unions. And so, digital investing is such a broad category. And there's so many different ways to approach it. And there's a lot of other companies in the space that have approached it differently than we have. But because we are serving credit unions as our primary focus, we wanted to add as much value as we could to credit unions. And so we did things like it took us a couple years to get what's called investing from checking off of the ground. And that's one of our major differentiators and selling points. I don't want to be too long-winded here, but just to give a quick benchmark of why it's so important for credit unions to consider investing from checking is the case study of Robinhood. So I know everyone's heard of Robinhood, but I don't know if everyone knows the details of how they got started and really where they are today. So I'll give just a very quick story there. Robinhood in 2015 was started as a self-directed investment app. They launched crypto in 2018, and by 2022, they grew to 22 million users when they launched a checking account, a savings account, and a debit card, right? And then fast forward to last year, 24, they did 1.1 billion of net interest revenue, which made up 37.6% of their total revenue. And so they used digital investing as a hook to become a bank, right? And so they're growing their deposits at a very aggressive clip, and they understand human psychology at a deep level where they modeled this because they know that people will just leave idle cash sitting in their Robinhood account, and all the while Robinhood is benefiting from the idle cash that's waiting to be invested, right? And so with us investing from checking, we're the only company that allows credit unions to use their checking account as the investment account. So no one has to install a Plaid connection. You don't have to transfer money over to a third-party brokerage account or a third-party crypto account. All that idle cash waiting to be invested just stays on the balance sheet of the credit union. We're actually engaged in a research study right now with a prominent research firm that I run to NDA, so I can't name the name, but I'm sure everyone is familiar with who it is. And we're studying the impacts of investing from checking. And the early findings are indicating that about 25% of the money that's transferred over to third-party investment platforms actually remains in cash. So if I transfer $100 over to Robinhood, I'm going to invest maybe $75 of that, but then keep $25 in cash that Robinhood's going to benefit from, right?
Yep.
And so that piece, and it's a small detail, right? But for me, I'm very passionate about that from a first principle standpoint. It didn't make sense to have a credit union force their members to transfer money over to a third-party brokerage before they invest. It's like, you also have, DDAs. Why do you need someone else's, right? So that's
Right.
Very long-winded way to explain what we do. And we can definitely get more into it, but I'll pause there.
Yeah. As you were talking about the example with Robinhood, one of the thoughts that I had is, in my generation, the thought was, I got to get my banking house in order first and then think about investing. Do you think young people think that way? Has crypto and Robinhood, are they thinking more about leading with investing and then finding a place for their checking account afterwards?
Well, I think that's what they've done, right? I think it was really strategic on their end because I think they know the banking market is fairly saturated, right? So there needed to be other value-added services that especially the younger generation were interested in, so they could capture a user base and then layer on the banking services after, right? I think there's a data point out there just generally that people have less than 10 apps on their phone. And so, why do I need a credit union app on my phone if I can do my banking with Robinhood or Coinbase even, or Fidelity? I mean, There's so many companies out there now that started with an initial use case outside of banking and then layered on banking after. And so, that's exactly what Robinhood did with investing. Coinbase now has debit cards that you can use. I think a lot of the crypto platforms do as well. And then, but that doesn't, it's not just limited to the, these like apps out there, right? Because Fidelity, same thing, right? Like Fidelity has the full scope of banking services, investment services. So does Schwab, so does E-Trade, the list goes on. And so credit unions are faced with this challenge now of how do they compete with these like one-stop shops for digital investing and banking. And, I think, at least my observation is digital investing is one of the most attractive hooks to actually engage with the younger population, which I know is a big initiative for a lot of credit unions right now.
Yeah, I've told the story before that I was walking out of a branch with my son who was 16 at the time, and he was just opened a checking account. And his feedback to me walking out of the credit union was, Dad, that took 45 minutes. It only took me 10 minutes to open my Coinbase account.
It's crazy, right? Yeah.
Right.
Yeah.
What is the typical engagement model? How does a credit union start with you? And, is it they have to open up all the services at once? They need to open up all the people at once? Like, talk a little bit about how you directly and specifically engage with a credit union to help bring your service on board for them.
Yeah, the first thing we do is, we want this to be a collaborative effort even through the sales process. And so we provide credit unions with what we call our asset outflow analysis. We went through the painstaking manual effort of depositing funds in all the major investment platforms so we could see what the ACH descriptions were, right? So we give that to credit unions, and that really helps build the business case because when you query your core and see how much money is leaving and going to Fidelity and Schwab and Robinhood and Coinbase, it's alarming. I'll tell you what's more alarming, Kris, is how few credit unions have actually done that. And, and the ones that have typically have like, I saw how much money is going to Robinhood. I'm like, that's great, but do you know there's probably 50 other companies that they might be transferring money to? And so, as they plug in all these, names into their queries, that those deposits that are leaving just grows into a pretty alarming number. And so that builds the business case. And then once they understand that pain, the investing from checking model really starts to add value. So we have an ROI model around that as well, that credit unions can use to really help push this through and get approval from their executive team or their board or what have you. But the actual engagement process is fairly simple. So InvestiFi, we're vertically integrated from a regulatory standpoint, meaning that we own our broker dealer, we own our registered investment advisor, and we own a crypto company, so we could provide all services under one umbrella. So InvestiFi is the parent. We're the technology provider and the program manager in this relationship. And when credit unions engage, all they do is sign an MSA with InvestiFi. And then the members at credit unions, as they go through onboarding to get approved to actually invest digitally, through online and mobile banking, they will then engage with the appropriate entities. And so it is built out in a modular way. I want to address that too. So, if credit unions were uncomfortable with crypto, or they just, there's boards that won't approve crypto yet right now. And, we're still aware of that. I think things are changing with the new administration. But, if a credit union just wanted to start with a self-directed stock and ETF offering, maybe robo-advisory, they could, and then layer on crypto down the road. On the flip side, we actually just signed up a $5.5 billion credit union that only wants to start with crypto. And so they're like, we might do securities down the road, but we've heard a lot of interest from crypto for our members. And so we can go at it that way too, right? So it's very flexible. But at the end of the day, if you do end up, so the three products we have, just to be very clear, is self-directed stocks and ETFs, robo-advisory, which we call guided investing, and then crypto. And so if you do engage with all three products, your members are first asked what products they want to enroll in. So we're not just forcing people to open up a crypto account, right? They have to opt into it. But assuming they do opt into it, then they will be onboarded with the appropriate, crypto qualified custodian, in addition to our broker dealer, if they're doing self-directed stocks and ETFs. And then they'll be onboarded to our registered investment advisor if they want to do guided investing, which again is robo. So, and all of that, by the way, the onboarding process is very seamless because we do integrate directly with the cores. So we access all the PII from the members and pull that in and route that data automatically through to the appropriate regulated entities, because they do need to do KYC to open up like a brokerage account for them, for example. But all that's, the form that they have to fill out was really just the FINRA required questions. And so, friction is limited because, they've already onboarded with the credit union. So all that data is already there. So you mentioned that it took your son 10 minutes to onboard with Coinbase. And I'm thinking while you're saying that, with us, it probably takes 1 minute to go through all of onboarding, and then you get approved near real time. So within seconds, you're trading if you want to be, right? So,
yeah. Is there, so that's got the experience in order for it to be successful has got to be highly integrated with the digital banking solution. Talk a little bit about your approach to doing that integration and making that seamless for the user.
Yeah. So, our use case in any digital investing company is going to have the unique considerations of needing to follow certain regulations to maintain separation between deposit taking activities and investment, right? So we actually engage with a law firm called Lowenstein. They're the firm that's represented Robinhood over the years, and they've been really helpful from a product standpoint to make sure that we have all the right disclosures in the right places so we can create the most unified experience that feels natively integrated inside of online banking. One of the things that we like to do is create either like a new account type, or a lot of digital banking providers have tiles where you can place a summary of your digital investing balance right on the main online or mobile banking dashboard. So credit unions can offer a similar experience to Robinhood, where you see checking, savings, and then your investment summary, right? So that's the first thing that we like to do. And then when you click on that, it opens up the experience. It won't pop you out into a new window or new tab.
Okay.
I say that with a caveat. There are several digital banking providers that don't have the ability to keep it in the same window, right? But as long as we can, we keep it in the same window, and then we just present a disclosure to them when they access that, letting the member know this is for regulatory purposes. They're leaving online banking and entering the investments portal, and then it has like the names of our regulated entities, like the broker dealer, the RA, et cetera. So it feels very native. And we like to have it as prominently displayed as possible to the members so they can, again, get that similar experience of what they get on Robinhood today.
Yeah. Talk about how do you do your core integrations? Because that's one of the questions that we hear a lot from fintechs is, the core, and from some credit unions, very honestly too, that the core providers are a barrier in order to do those integrations, and they make it difficult. How did you crack that nut?
Man, I think it's an art more than a science, but I think I think it starts by, I think one of the things that's lesser known to maybe some fintechs that are newer to the space is you can access core API functionality from certain digital banking providers, right? Because if a digital banking provider works with a credit union, they're going to have to be integrated with that core. And so some digital banking providers will expose those API endpoints. So we don't have to go to, say, FIS or Fiserv to get access to their cores directly. But there's, it's a big bowl of spaghetti of what I found working with several digital banking providers, right? Because they're all set up differently. API functionality from the cores are all different based on who you're partnering with. And so we just went through the process of, we started with Scimitar, right? Because that is, Jack Henry is fairly easy to just pay to get access to Sim Exchange. And that's obviously, I think, one of the more popular credit union cores. So we started there. And then the next store that we tried to break down was Fiserv. DNA, I think, is one of the more popular credit union cores as well.
Mm-hmm.
And so, that is, a unique animal to navigate, which I'm sure a lot of people listening are familiar with. But I think it's just asking around people to get introductions to the right place. And obviously, if you have a credit union that's excited about your product, they'll help you open that door, right, and make an intro to you. And so, that's how we really started, is getting credit unions excited about what we're doing, and then get the appropriate introductions into the right places. And then as you mature as a company, you become, your brand gets out there, and it's, the friction is, gets removed more over time from the big players that may not prioritize working with smaller fintechs.
Let's talk about your brand. You touched on the idea that you had changed from CryptoFi to InvestiFi. What led you to that decision, and how did you know that was the right time to make the change?
So just a little more background of our journey. So we started in 2021. We started building 2 digital banking integrations, and I was actually shocked that digital banking providers let us actually integrate into crypto, or integrate a crypto solution inside of it, because at the time in 2021, crypto was still a little taboo. It was right around the same time NYDIG was launching their solution. They were the 500-pound gorilla, and we were really the only other very small startup doing it at the time. So just to touch on a quick personal note, I was really excited about doing it. And when we got approved to actually build these integrations, I had sort of oh no moment. Now I need to actually figure out how I'm going to build this, because, that was the first step. I wasn't sure if it was going to work or not. So I had to have a direct conversation with my wife around if we actually want to go down this journey. And she's an amazing woman, and agreed to let us invest our entire life savings to start CryptoFi, to get it off the ground, so we could hire a few engineers to build those integrations. Fortunately, about 6 months after that, we were able to get funding, and then the rest is sort of history. But in 2022, we signed up actually a few banks. I don't know if that's taboo to say on this podcast or not, but
absolutely not. We cater to both community financial institutions.
I love it. Yeah, and that they were community ones, right? And so, but the OCC and the FDIC came in and shut down our pilots, and so that made it really challenging. Fortunately, the NCUA has been very supportive. Big shout out to Kyle Houtman, big champion for crypto in the credit union space, and so we sort of just pivoted our focus to only sell directly to credit unions. Found a few forward-thinking, innovative credit unions, which also want to give a shout out to We Street Credit Union. They've been an amazing partner to us. They were the first one we launched with in September of 23. And then Frankenmuth Credit Union has probably done more for us than anyone. They've been amazing, and they actually ended up, we launched with them in November of 23, and that's actually the month that they started a QSO called CU Wealth Next. I think Josh was previously on your podcast as well.
Yep.
And so, that's when they funded us for the $5 million investment. And so I was talking to them all through 23 about this, because after our pilots got shut down in 22 by the bank regulators, we sort of started to shift our value prop when it became obvious that crypto transaction fees, after all the bank FTX and everything like that, right, was not as material. That was our initial value prop, right? You're a credit union, you want to drive a new stream of non-interest income, you can drive crypto transaction fees just like Coinbase is. But what became more clear is that was really a secondary value prop to the core value prop of keeping those deposits in-house by offering your members a very similar service to where they get elsewhere. And crypto is just half the picture. We're still very passionate about crypto. We're still a company that believes crypto adds a lot of value to credit unions and to their members. But that wasn't enough, because Robinhood obviously offers stocks and ETFs and other products as well. And so with us doing investing from checking, we had already built out those integrations. We built out those rails. And so the thought process was, it's not going to be overly challenging just to add on additional asset classes, because the most painful thing was building those digital banking integrations, those core integrations, our back office technology, and layering on new asset classes wasn't as big of a challenge. And so that was the business plan we executed in 2024. Really proud of our team, from soup to nuts, from the time we got that investment to the time we launched securities in production. We did it with the United Financial Credit Union, another amazing credit union that's done so much for us. In September of 24, we did it in less than 9 months, and it took because we have the same legal counsel as Robinhood. We know that it took Robinhood 2 years to launch their product. from soup to nuts, and it took us less than 9 months. So I was just super proud of our team. And, since then, it's been very clear we've turned the corner. We launched with another credit union called Bluestone, who's also amazing in South Dakota, in October. And then, this year alone, we've already signed up 7 more credit unions, and we're contracting with more. And so I think it was clear it was the right decision. I skipped over the part where we branded to InvestiFi. So after we, were going down that path, we officially rebranded in February of 24. And that became a very, looking back now, I think our entire company is happy that we made that change and we layered on these additional asset classes, because when you compare the outflows going to Coinbase versus every other platform that also offers securities, it's about 5 to 10x, right? So we're 5 to 10xing the value for the credit unions by offering securities alongside crypto.
That was going to be my next question. Now that you've had credit unions live, what are the types of changes in engagement, in new memberships that they're seeing? Like, not talking about any particular credit unions, but what type of trends is your solution helping them change in their membership usage and engagement?
Yeah. So number one, it's a great marketing tool. This is it's not an actual, like I said, there's a small data point, but off the cuff, we had a credit union just, one of the early credits that launched with us, within the first few weeks of launching, they had someone that came in, deposited $90,000 just because they wanted to buy crypto. Literally last week, we had a credit union, we had a potential member walk into one of our credit unions and want to buy $3 million worth of crypto. We couldn't actually handle those limits, but it shows that people really trust their community financial institution more than they do a lot of these new apps that are spinning up, right? Yeah. And so, and the credit unions have the advantage of these generational relationships with their member bases and their communities, and community banks too, right? Yeah. And so they have the branches, they have the those relationships, they have the ATMs. And, I would be very surprised if Robinhood ever had a strategy that they wanted to roll out, hundreds or thousands of branches across the country, right? So credit unions have that unique position in their community, and then they can augment that with a digital investing experience that competes with these apps out there. Then that's the total package.
You have such an incredibly innovative product. How did you get past? You've touched on it a little bit, but how did you get past the regulation barrier, right? Because a lot of credit unions and fintechs will have great ideas, but they always cite regulation as being the thing that's holding them back, right? You guys went head at it, went straight at it. How did you get past that? How did that not become a burden or a break to the goals of the organization?
So I think the first thing was making sure that everyone at our company understood the value we were going to create if we could figure this out, right? It goes back to first principles and getting everyone bought into that concept. And then once we had that, then it became a very creative series of brainstorming sessions with our compliance and legal teams. And we had some very high-priced legal bills, but I think the ROI is definitely paying dividends. So Lowenstein is our securities counsel. They also have crypto experts at Lowenstein, and so they've been great for us. And then we also use another attorney named Catherine Weber. She used to work at QSO Law, but she's been a credit union attorney for over 20 years. And so having her in the room with Lowenstein, it was a very creative effort to really look at all the regulations that would apply to what we were going to build. And they figured it out for us. And it was it took a while, right? It took a couple of years to figure all that out. But, once we did, we feel pretty strongly that's a very substantial moat around our business, because, trying to do that from the ground up was very challenging, but I think was the right move. And I think everyone's super glad we did it.
I tell people all the time in the startup world, the one thing you can never plan or think about enough is just how many attorney relationships you're going to have.
Right. I know. Exactly.
As you're trying to navigate all of this.
Right.
This you've alluded to it. This isn't your first startup, right?
Right.
What did this one? What did you bring to this one from your previous experience that you think really helped you? It could, what were you from a approach perspective, or a kind of readiness perspective, or what I was willing to do and versus what I was previously willing to do? What do you think you brought differently to this one as an experienced entrepreneur?
Yeah, so the last one I did had a lot of cash issues, and so it wasn't as successful as I intended it to be. And
Mm-hmm.
so I think the biggest lesson that I learned that I carried here was that you have to keep revenue in mind. I think too many founders are focused on like the 5 and 10 year vision, and then
Right.
fail to understand that especially in down markets, VCs or any investor is going to have a tough time underwriting whatever investment that you need to continue to grow. And so we took a fairly unique approach in 2022, and we had those banking pilots get shut down. That
Mm-hmm.
really had a material impact on like the pro forma that we have developed that we were marching towards with our initial business plan, right? And so we looked for a creative way to be able to drive revenue, and because we were a crypto company at the time, we ended up standing up what we call a crypto trade desk, where we would cater to high net worth individuals. And we're not looking to compete with credit unions or banks for any of their business.
Mm-hmm.
But if someone has over $100,000 and they want to buy crypto with it, we provide a white glove service to be able to for them to do that. So they can call in, they can place an order, they wire us money, and then we send them crypto in return. And so fast forward to 2024, last year, that business did 17.5 million in revenue, and that's what's allowed us to hit profitability. And so
Wow.
we're reinvesting back into our business in a big way, and it's actually allowed us to not have to raise any additional funds as we continue to grow. So yeah, it's pretty strategic. And one of the things, I guess, this is a good forum to actually announce that you heard it here first. We're going to be rolling out is a private client crypto business to
Mm.
allow, because I mentioned that it's a real story,
Yep.
where someone walked into that credit union, wanted to buy $3 million worth of crypto. The credit union had to turn them away, and like I'm sitting there like, why are we turning them away, right? Like that's a great opportunity for a credit union to develop a relationship with someone that has a lot of money to
Yeah.
be able to grow their deposits, right? And then for us, that's a lot of crypto business. And so we're actually with that credit union, I'm actually talking to them next week about developing a private client crypto business where if they so our limits for digital crypto investing right now are 25K.
Mm-hmm.
But if they want to do more than $100,000 worth of crypto investments, and we can process millions of dollars of transactions through our trade desk,
Mm-hmm.
then we can set up an option in the call tree for the credit union. It can be forwarded to our crypto trade desk, where there's a white glove concierge
Mm-hmm.
service, and then that crypto will still be put back into the wallet, the custodial wallet that's attached to that credit union. So
There you
that'll
go.
be forthcoming later this year, and we're pretty excited about that. So
And the concept is somebody walks into a credit union off the street, has $100,000 they want to do. They're directing them to this VIP white glove service.
exactly. And then we share
Oh,
the fee with the
wonderful.
credit union, and then
Yeah,
they get the benefits of keeping that in their ecosystem, right? And then they can develop a relationship with that member to hopefully give them other services. So
that's a great use case. That's a great use case. Um, so where do you think InvestiFi is in 5 years? Like what are you thinking about from a vision perspective? What's next? What's the next horizon look like?
yeah, I'm glad you asked, Chris. So one of the things we're really excited about is our partnerships that we're going to be forming with the major RAs in this space. So
Mm.
it's really an interesting dynamic that's playing out in real time right now, where there's companies like LPL, Raymond James, Cetera,
Mm-hmm.
Osaic, Ameriprise, Principal. Right, they sit inside of banks and credit unions and offer wealth management. Sometimes as a
Mm-hmm.
dual employee of the credit union, or there's other structures,
Right.
but those companies do not have any integrated digital investment product. Like LPL has GWP, and it's a standalone product outside of
Yeah.
online and mobile banking. And no credit union wants to encourage their members to use a separate app besides their credit
Right.
union's app, right?
Right.
And so that path to integrate to digital banking and all the cores, that's really tough. That's not LPL or any of those companies, business, right? And so,
Mm-hmm.
so we're getting, we're working towards, we're making more progress with some than others, and there'll definitely be announcements coming from us later this year to
Mm-hmm.
really become an approved vendor with these bigger
That'd
RIAs
be
or
great.
broker dealers, because what happens is, and one of the things that we do is we'll give 100% of the assets under management fees for the robo solution back to the credit union for a couple reasons, but mainly because we don't want to be viewed as competitive by in-house wealth management, because they care so much about those fees. And if they feel like we're trying to compete with those fees, there's going to be issues. And so, we consider ourselves more of a technology company. And so we're just charging a per member per month fee, right? Just like any other SaaS company would. And we're not trying to compete on fees. And so because of that, we also have a back office lead generation tool for wealth management, because most wealth managers have minimums or implied minimums. And I hear anything from 5,000 on the low end to 100,000 on the high end. Sure. The midpoint, most common minimum I hear is about 25K. And so if you don't have 25,000 to invest right now, the advisor is sending you to Robinhood or Fidelity or somewhere outside of the credit union. And then let's say I have only a few $100 to invest now, but as I grow my career, I have more money, 3 years, 5 years from now, I might have 25K, right? But by that time, I'm not coming back to my credit union because I'm already on Robinhood and I'm gone, That's right? And That's so right. what we give the advisors is a tool where they can track the balances, the digital investing balances of the members. We can alert them when that minimum is met, and then the advisor can see what they're holding from a digital standpoint to warm up that outreach and start a relationship with that member to hopefully convert them from a digital investor into a managed account. The second thing that we're doing, and really why we find these partnerships so valuable for us to become an approved vendor, is because if we have the portfolios and risk questionnaires that these companies use for their traditional wealth practice, right? So for those listening that don't know how like financial advisory, robo-advisory works, there's a risk questionnaire that members fill out. Based on the responses, they're recommended a preset portfolio of assets, usually like ETFs that are diversified with fixed income or bonds or equities, depending on the risk profile of that member, right? And so those risk questionnaires and portfolios, we can embed inside of our robo solution. And so when it comes time to convert that member from a digital investor to a managed account, there's no friction because it's the same portfolio, right? And otherwise, if you don't have that, like if you're using, like we have off-the-shelf portfolios that we think are great, but if our portfolios are performing really well in the robo solution, that member's not going to want to convert to a different portfolio, right? Because they're happy with the portfolio that they have. And so if they start with the same portfolio that they'd be converted to, then it provides a lot more synergy and a lot more value for everyone in the ecosystem. And so, the next step for us is really to build out this partner network within these bigger wealth managers that sit inside banks and credit unions, if that makes sense.
So your service then becomes an on-ramp, right, for their programs, whereas not having your service is really an off-ramp. Exactly. If we're honest, right? Because even if the advisor isn't telling the member, "Oh, you've only got 10,000, go to Robinhood," not having an option sends the member to Robinhood.
Right. Exactly.
Yeah. Let's just be honest here. So right now there's going to be a bunch of credit unions calling you and saying, "Hey, how do I get on board?" How do they get in touch with you, Kian?
So if you go to InvestiFi.co, not.com. So InvestiFi, InvestiFi.co. And if you fill out the form there, I promise someone will reach out to you same day. We love talking to credit unions and getting into the weeds on how our solution could add value.
That's awesome. Well, listen, thank you very much for joining us today. I'm really very impressed by what you've built, and I'm excited for what you're bringing to the industry. Thank you.
Thank you, Kris. Thanks for having me.
What a great conversation with Kian. I would encourage all the credit unions to check out InvestiFi and see how they can help them attract and engage new members. If you like this content, please like and subscribe on your platform of choice. We really appreciate you watching this episode. We will see you next time.